25 years ago, Hyderabad's economy centered on its historic core. Today, the city has expanded into a global hub for technology, pharmaceuticals, and aerospace. But this rapid growth hides a common trap. Many buyers still purchase land based on social media hype, broker rumors, or a general fear of missing out. In a market this vast, finding a random piece of cheap land rarely leads to success. Instead, the goal is to find a location that supports your specific financial timeline. Land values rise predictably only when three forces work together: economic growth, employment generation, and infrastructure development. When these three overlap on a map, demand follows. Real estate appreciation relies on these three forces. If you can identify where they are converging, you can identify where the next growth cycle will begin. While many cities grow in concentric circles from a single downtown, Hyderabad follows a multi-corridor model. This map shows how specialized industries create distinct hubs across the region. We see IT in the west, pharma in the south, and manufacturing on the outskirts. These hubs act as magnets, pulling urban development away from the center, along the highways connecting them. Look at this expansion pattern. Residential and commercial zones are spiderwebbing out along national highways and ring roads, leaving large gaps in the areas between them. Successful investing requires you to look at each of these highway corridors and match them to your budget and your risk profile. We evaluate corridors on industry, infrastructure, timeline, and risk. Proposed infrastructure, like the regional ring road, offers low prices but requires a 10-year hold and high risk. Existing infrastructure, like the outer ring road, provides immediate utility and lower risk, but requires higher upfront costs. Balancing this trade-off between time, cost, and risk is the key to a successful purchase. Let's look at the western corridors, which include High-Tech City, Gachibowli, and the Mumbai Highway. This zone is driven by a massive concentration of over 1,500 technology companies and global capability centers. Because these massive employment centers are already fully operational, the area offers immediate livability and direct access to high-income renters. However, this maturity comes with a high entry price. Because the market is saturated, your percentage yield will likely be lower than in an emerging zone. The Western hub works well for capital preservation and immediate use, rather than aggressive, speculative growth. Next is the Southern Horizon, tracking along the Sri Sailam and Bangalore highways. It's anchored by the International Airport, aerospace manufacturing facilities, and the proposed future city. Buying here offers high potential for capital appreciation as industrial parks expand and the regional ring road eventually connects the area. The trade-off is that these zones currently lack the infrastructure for immediate living. Investors must be willing to wait out government development timelines. The South is a calculated holding play that requires a 5 to 10-year timeline to see its full potential. Finally, we have the eastern and northern routes, covering the Vijayawada, Warangal, and Medchal highways. These corridors rely on logistics hubs, warehousing, wholesale markets, and traditional industrial parks. Growth here is linear and steady, following traditional business expansion rather than technology booms. While these specific areas rarely see explosive price spikes, they offer a very reliable path for long-term residential expansion. Every purchase in Hyderabad depends on your specific financial objective. Choose between two paths. Path A is building a home in 1 to 3 years, prioritizing connectivity near the existing outer ring road. Path B is building wealth over 5 to 10 years, focusing on intersections near the proposed regional ring road for future appreciation. Most investor failures happen when these goals are mixed, like buying speculative land expecting to build a house tomorrow. Regardless of your chosen corridor, there is one non-negotiable rule. Many buyers are tempted by unapproved Gram Panchayat land or plots near lake buffer zones because the price per square yard is lower. This mistake can lead to a total loss of capital through litigation, demolition, or frozen development rights. Safe investments require layouts with official HMDA or DTCP approvals. Verification is your only protection. Profitable investments in Hyderabad come from the deliberate alignment of your timeline to a corridor, backed by rigorous legal verification.